Welcome once again to our commerce classroom. In this session, we will discuss about consolidated financial statements. Consolidated financial statements Ind AS 110. We begin this session by discussing group companies and group structures. Group companies and group structures. All of you know that in the era of globalization, competition is growing between companies. There is a tendency among business units to combine together and form groups. Through business combination, it is possible to avoid unhealthy competition. I repeat, we are in the era of globalization. Competition is growing between companies. So there is a tendency among business units to combine together and form groups. Through business combination, it is possible to avoid unhealthy competition. One of the popular methods of business combination is forming holding and subsidiary companies. We know it. The holding company together with the subsidiary is called the group. The holding company together with the subsidiary is called the group. When the financial statements of parent and subsidiary companies are combined together, we will get a picture of the group's total activities. I repeat, when the financial statements of parent and subsidiary companies are combined together, we will get a picture of the group's total activities. The combined financial statements of parent and subsidiary companies are called consolidated financial statements. I repeat, the combined financial statements of parent and subsidiary companies are called consolidated financial statements. Then we discuss about holding company. Section 2, subsection 46 of the Companies Act 2013 defines holding company. The company is said to be the holding company if that particular company holds or owns at least 50% of the other companies and has authority to make management decisions, influences and controls the company's board of directors. I repeat, Section 2, subsection 46 of the Companies Act 2013 defines holding company. The company is said to be the holding company if that particular company holds or owns at least 50% of the other companies. First condition, that particular company holds or owns at least 50% of the other companies and has the authority to make management decisions, influences and controls the company's board of directors. A holding company may exist for the sole purpose of controlling and managing subsidiary companies. Then, subsidiary company. Section 2, subsection 87 of the Companies Act 2013 defines subsidiary company. The subsidiary company is the company that is controlled by the holding or parent company. I repeat, the subsidiary company is the company that is controlled by the holding or parent company. It is defined as a company or body corporate where the holding company controls the composition of the board of directors. I repeat, it is defined as a company or body corporate where the holding company controls the composition of the board of directors. As per the Companies Amendment Act 2017, Section 2, subsection 87, if the holding company have control over more than 50% of the voting power of another company, that particular company will be identified as the subsidiary company. I repeat, as per the Companies Amendment Act 2017, Section 2, subsection 87, if the holding company have control over more than 50% of voting power of another company, that particular company will be identified as the subsidiary company. Then we have to note this point. If a holding company owns 100% of the stock of other company, then the other company would be known as wholly owned subsidiary of the holding company. Then we discuss about different types of holding companies. Firstly, pure holding company. Pure holding company. A holding company is said to be pure holding company if it exists solely for the purpose of owning stock of shares in other companies and doesn't engage in the business operations separate from its subsidiaries. I repeat, a holding company is said to be pure holding company if it exists solely for the purpose of owning stock of shares in other companies and doesn't engage in business operations separate from its subsidiaries. Pure holding company doesn't engage in business operations. Then secondly, holding operating company or mixed holding company. Holding operating company or mixed holding company. If the parent company holding shares in the subsidiaries and also engage in its own business operations is said to be holding operating company. I repeat, if the parent company holding shares in the subsidiaries and also engage in its own business operations is said to be a holding operating company. Then conglomerate. A conglomerate is a combination of multiple business entities operating in entirely different industries under one corporate group, usually involving a parent company and many subsidiaries. I repeat, a conglomerate is a combination of multiple business entities operating in entirely different industries under one corporate group, usually involving a parent company and many subsidiaries. Often, a conglomerate is a multi-industry company. A conglomerate is a multi-industry company. Indian examples of conglomerate: Tata Group, Reliance Industries, etc. All of you know that IFRS 10 and Ind AS 110 dealt with the consolidation of financial statements. As per Ind AS 110, every company having a subsidiary has to submit consolidated financial statements in addition to its own financial statement. I repeat, IFRS 10 and Ind AS 110 dealt with the consolidation of financial statements. As per IFRS 10 and Ind AS 110, every company having subsidiary has to submit consolidated financial statements in addition to its own financial statement. While preparing consolidated financial statements, we have to do many adjustments. Firstly, we discuss about non-controlling interest, NCI. Non-controlling interest. NCI is that portion of interest held by outsiders in the subsidiary company. I repeat, NCI, non-controlling interest, is that portion of interest held by outsiders in the subsidiary company. NCI refers to the proportionate share of interest or net assets held by outsiders in the subsidiary company. NCI refers to the proportionate share of interest or net assets held by outsiders in the subsidiary company. For example, X Limited holds 70% shares of Y Limited. This means that 30% shares are held by outsiders in the group. This further means that X Limited has controlling interest in Y Limited because X Limited holds 70% shares in the Y Limited. And the minority group holding 30% has non-controlling interest in Y Limited. Then computation of non-controlling interest. For computing NCI, non-controlling interest, firstly we add paid up value shares held by outsiders and proportionate share for outsiders in the reserve and surplus of the company. From the total of these two, paid up value shares held by outsiders and proportionate share of outsiders in the reserve and surplus of the company, we deduct proportionate share of loss in the subsidiary for outsiders. Then we get non-controlling interest. We can find out non-controlling interest in another way. NCI is equal to share of minority shareholders in the net assets of subsidiary company. I repeat, NCI is equal to share of minority shareholders in the net assets of the subsidiary company. All of you know that net asset is equal to share capital plus reserve and surplus, or net asset is equal to total assets minus total outside liabilities. Then we solve one problem. X Limited has owned 75% of the share capital of Y Limited since the date of Y Limited's incorporation. The balance sheet of Y Limited is given below. Balance sheet, asset side. Firstly, non-current assets, plant property and equipment 5 lakh. Then current assets 4 lakh. Then total of assets that comes to 9 lakh. Then liabilities and equity on the liability side. Firstly, equity, share capital 40,000 equity shares of rupees 10 each, amount comes to 6 lakh. Retained earnings 1,20,000. Current assets 1,80,000. Then total of liability and equity, that is equal to 9 lakh. Calculate non-controlling interest, NCI. This is our question. Then our solution. From our question, it is clear that X Limited hold 75% shares in Y Limited. Its meaning is this: 25% shares are held by outsiders. So, for the calculation of non-controlling interest, we have to take 25% in the share capital and 25% in the retained earnings. 25% of share capital, 6 lakh into 25%, that is equal to 1,50,000. Then 25% of retained earnings, or retained earnings 1,20,000, 1,20,000 into 25%, that comes to 30,000. Then NCI, total of 1,50,000 and 30,000. Non-controlling interest is equal to 1,80,000. We can calculate this non-controlling interest in another way. That is the calculation of non-controlling interest on the basis of net assets. For this purpose, we have to calculate net asset. Net asset is equal to share capital plus reserve and surplus. Share capital in our question 6 lakh, then reserve and surplus 1,20,000. The total comes to 7,20,000. 7,20,000. We can find out this net asset in another way by deducting total outside liabilities from our total assets. Net asset is equal to total assets given in our question 9 lakh, then total outside liabilities 1,80,000, 9 lakh minus 1,80,000, that is equal to 7,20,000. In both way, our net asset is equal to 7,20,000. Then NCI, 25% shares are held by outsiders, so NCI is equal to 25% of net assets. 7,20,000 into 25%, that comes to 1,80,000. 1,80,000, that is what our non-controlling interest. I think our first adjustment, computation of non-controlling interest, is clear for all of you at the time of preparation of consolidated financial statements. We will discuss the other adjustments in our coming sessions. We will meet again. Till then, goodbye.